Welcome back, accounting boffins. Yes, remember we're doing a question on the cash budgets. Quick recap, when you're doing a cash budget, important to remember that you're dealing with receipts and payments, because if you were doing a projected income statement, then obviously the dynamics will be totally different and you'll focus on incomes and expenses. Right, the question now says here, study the information given and find the missing values. So what are we looking for? The missing value here is your cash purchase of trading stock for the month of August. All right. Okay, let's look at how we're going to go and do this. Let's look at the information first. One, the business uses a markup of 50% on cost. Important in terms of our calculations. Remember, cost price, markup, and selling. Cost is 100, markup is 50 in this instance, therefore my selling is 150. Okay, so I've got that information. The business maintains a fixed base stock by replacing stock on a monthly basis. Fixed base stock, I've explained it early on. Let me explain it again. Fixed base stock means that you maintain the same level of stock continuously. So whatever stock is leaving your business, that's the amount of stock that you need to replenish. That's the amount of stock that you need to buy in order to maintain fixed base stock. Right. 75% of the total purchases are on credit. Again, information important. 75% of your purchases are on credit. That means 25% of your purchases will be for cash. Creditors are paid in the month following the month of purchase to take advantage of a 5% discount. Okay, so we have all that information. We are now expected to calculate this figure here, which is our cash purchases of trading stock. Let's go back. Right? Clearly you can see that you have your sales figure there, right? And you need your cost of sales figure. Here we go. Obviously, firstly, we find out that we have 84,000 Rand as the total purchases, right? Determine the cost of sales first. So obviously, this figure of 84,000 Rand will be based on your, let's identify it, there's it, it's your sales figure, right? So it's your sales figure that you are working with. What do you do with that sales figure? You say 84,000 Rand, determine the cost of sale. How do we do that? Times 100. Let's do the calculation together so you can see it. Once again, cost price, markup, selling, right? Your cost is 100, your markup is 50, your selling is therefore 150. So what do? It's 84,000, which is my selling price here, times 100 over, so in order to determine your cost price, it's 100 over 150 times your actual selling price. Okay, now 100, so multiply by 100, there's my 100, divide by 150, as you can see, there's my 150, times, obviously, you are told that only 25% will be paid for in cash. The importance of this information is we can see here, 75% of your purchases is on credit, so obviously your cash purchases is only 25% of the total purchases figure. Therefore, looking at my calculation once again, it's your 84,000 times 100 divided by 150 times your 25%, and that is important. So what are you determining here? Your cash purchase of trading stock. That means how much stock are you buying for cash? So let's take this one step back. Number one, take your sales figure for August, which we did, 84,000, right? Number two, determine the cost of sale, which we did 100 times and 100 over 150 or 100 divided by 150. And number three, the third component, what component of that figure will be for cash? 25%. Can you see? So Very important, guys. Sales, cost of sales, split up into cash and credit. In this case, the question was the cash purchases, and clearly you can see it is the 14,000 Rand, and therefore here in your cash purchases for August, there's my answer, 14,000 Rand. So once again, it is your sales figure. Determine your cost of sales, because obviously it's a cost price of the goods that we're going to repurchase, times the cash component, which was the 25%, to give me a final figure of 14,000 Rand. So clearly you can see there is your cash purchase of trading stock, which was the 25%, namely 14,000 Rand. Okay. You are asked to determine the payment to your creditors, and what do we do here? Once again, let's go back and see what we're going to do here. Number one, same story, 50% markup, fixed base stock, 75% of total purchase on credit. Creditors are paid in the month following the month of purchase to take advantage of a 5% discount. Okay, so now what do? Determine the 82,000. What was the 82,000? You can clearly see here that the 82,000, if you purchased in June, you're going to pay that first payment in July. And that's why the question said, find the payment to creditors in July. So you, in this case here, you have the cost of sales figure, right? You have the cost of sales figure. And that's important. 82,000 is your cost of sales. Okay, let's take the cost of sales that we have here. There's my 82,000, right? Times 75%. Why? We got 82,000 times 75%. Why 75%? Obviously, that figure is the credit purchases. You see, you got your cost of sales. Now you split it up into cash and credit. So you wanted the credit component of the payment. That means, again, remember, look at the provisos. 75% of the total purchases are on credit. It's your credit purchases that will give you your payment to your creditors. So therefore, we took our figure of 82,000 Rand, which we calculated, times the 75%, and we worked it out to be 61,500. Okay? 61,500. Here we go. That's just a part of the calculation. That's a component of that calculation. I'm just showing it to illustrate to you how you got that 61,500. It was your 82,000 times the 75%. Okay, now, how are you expected to make your payment to your creditors? In the month following the month of purchases, subjected to a 5% discount. The easiest way to do that is to take the 61,500, watch, times 95%. And you get a figure of 58425. There's my answer. There's my answer, 58425. So once again, watch what I did. I took my cost of sales component, the 82,000, because that's the amount of goods that I have to buy. I split it up into cash and credit. For this particular calculation, I needed my credit component. Therefore, that was 75%. So I calculated that to be 61,500, and then I'm told that I'm only going to pay 95%. Why am I only going to pay 95%? Because I'm entitled to a 5% discount. Therefore, you could first calculate the 5% and subtract it, but you don't want to waste time with that. Go directly to your answer. Take your 61,500 times the 95%, because we're only going to pay the creditor 95%. The 5% is my discount. Therefore, I'm going to pay an amount of 58425 as my payment to my creditor. Okay, done and dusted. Let's move on. We are told that salaries, the workers will receive an increase of 3% in August, right? The bookkeeper will also receive an increase in August 2020. Right, there's your salaries of your 5 workers, 32,000 Rand, right? Again, based on the information that we have, firstly, you said they wanted to know, the question said, calculate the amount that has to be paid to our salaries of our workers. So there's my 32,000 of all 5 workers, right? Immediately, you can see that there's an increase for those workers. And how do we take that? We say, look at the amount they receive an increase of 3%, right? And if we take that figure, let's get our calculators out. Let's take that figure times by 3% will give me a figure of 960. And I now say the workers will receive an increase of 3% in August. Therefore, the bookkeeper will also receive an increase in August. Therefore, watch what we do here. The 960 is the increase, as you saw on our calculation. There's my 960. So therefore, the new salary will be the 2,000 plus the increase will give you a figure of 32,960. Here we go. 32,960 will be the new figure. And therefore, here you can see that that was my old salary. Increase it by the amount of 3%, therefore giving you an increased figure of 32,960. Okay, next one. The insurance premium is paid at the end of each month. Right. The monthly premium will increase by 10% on the 1st of August. Okay, interesting question. Look what they've done. They've told you what the August premium is. Now remember, the insurance premium is paid at the end of each month. However, the monthly premium will increase by 10% on the 1st of August. So this figure here that you're seeing, the 2904, includes the 10%. So it has the new premium built into it already. The question wants you to calculate the previous month's premium. Can you see that? So a totally different angle to this question here. You are expected to calculate the premium prior to the increase. Okay, this is what we do. Watch what we do. You take the figure of 2904, which was the new insurance figure, right? And you say, fine, take that figure, multiply it by 100, divide by 110. Why are we doing that? Very simple. It means the old insurance was 100 and the new insurance is 110. Clearly you can see that the figure that you are working with, the 2904, is the figure which has the increase built into it already, namely the 110. Let's do this calculation here. If we take our 2904 times 100 divided by 110, and that will give you 2640. So clearly, what was the 2640? Your 2640 was the increase, was the amount of the insurance prior to the increase. So clearly you can see here that the insurance amount prior to the increase was 2640. So clearly 2640, right, was the amount before the increase. Take the increase into consideration, and you will see therefore that if you increase that amount by 10%, you're going to get your new figure of 2904, which was given. So in this particular example, they gave you the insurance after the increase. And that's the important part to remember. The 2904 was the amount prior to the increase. In other words, another way of setting this out for you, 2904 is equal to 110%. Watch, I'm showing you another way of calculating this figure. The 100% is your unknown. Therefore, in your calculation, watch, we're cross multiplying. 2904 times 100 divided by 110. Clearly evident from your calculation. 2904 times 100 divided by 110 will give you 2640. Okay, so that's how we calculated the insurance premium prior to the increase. Here we go. This is our final figure. 2640 was my answer based on the 2904. So in terms of percentages, this was your 110% and this was your 100%. As you can see, it increased by 10%. Okay, so that's how you go about doing a calculation where they give you the increased amount and you have to work out the amount prior to the increase. Okay guys, so in this particular segment, we focused on specific calculations on how to complete the cash budget based on information that is provided to you. Okay, let's take a quick break. When you come back, we'll go into the final segment of the question on cash budgets. See you just now.